Good Wednesday morning, everyone. Kip Harrods here with your midday VRA market update. Well, what an odd day. What an odd period we're in right now because, we had inflation data this morning that was worse than expected. Most believed it was going to begin to show improvement. Instead, the CPI came in at 8.3% for April versus the 8.1% estimate. And there was a big drop in average hourly earnings, falling 2.6% year over year. So, you know, the argument had been that yeah, we have inflation, but wage inflation, right? People are making more money, so we can handle that. That's now the problem. It's now that's now separated. We opened with sharp losses, and then reversed, went up big, 350 points. Now, as I speak to you, we're down to 40 points on the Dow, but the big loss is in Nasdaq, down 164 right now. There's a weight on tech stocks, and there's been a lot of selling that's been done by hedge funds. We know this is coming out of a lot of it out of Japan, a lot out of Europe, some in the U.S. as well. We're talking about large hedge funds that have just been destroyed because they never sold their positions. Think of Kathy Wood at ARK and multiply it times about 10. That's the size we're talking about here. Big money on the wrong side of this market being hammered. And now they're just like, get me out. I just get us out. They've been ordered to get out while they still can without having major liquidity calls and margin calls. And that's probably part of what's happening now. Again, that's the weight of this market. However, based on our VRA investing system, we are at extreme oversold on steroids, meaning our momentum oscillators have reached a level now that, yeah, they could fall a little more stretch, sure, but we're right there. We're at levels we typically see major reversals in the other direction. The rubber band is really stretched, and but we're not getting it. I tell you, if we can't get a bear market rally in this condition with this market this oversold, folks, we're not going to have one. This market's going to go a whole lot lower. Having said that, the internals are pretty good today. It is midday. We typically see a midday lull. We call it a wave pattern, just the opposite of the open at midday, and then a move higher. So I think we're going to see a bear market rally here, but there is forced selling that's taking place, and this market is very ugly. Again, you're fighting the tape. You're fighting the Fed. The Fed hasn't even started quantitative tightening yet. That starts next month, and this market's tanking. And they intend to sell, as Jay Powell has announced, $3 trillion worth of government debt out of the QE balance sheet of $9 trillion. They intend to sell $3 trillion in the next 3 years. Good luck with that. That ain't going to happen. The Fed's trapped. They know it. We have stagflation now. It's a real problem. And again, Joe Biden loves to blame everybody but himself. This is obviously a repeating pattern that's well established. Man, yesterday, did he ever? He really stepped in it, didn't he? I mean, blaming Republicans, ultra MAGA, whatever he calls it, blaming Republicans, Americans, right? Over half of America that really just loves this country and loves Trump and wants to see the country back on track like it was when Trump was president. And now Joe Biden's throwing them all under the bus. These people seem to have no concern whatsoever about the midterms. That's the way they're speaking. And it makes you wonder what they have planned for us, doesn't it? What else? The put call ratio today is back above 1. Again, we never got really elevated. And what also is interesting today is that even though we had big inflation data, the 10-year continues to back off. Yield is now down to a 2.94% on the 10-year yield. That's interesting. That's a bit of a disconnect from what you see in the headline news with inflation, which leads a lot of people to think, yeah, we probably are at peak inflation. I kind of think that's true. But the question no one's answering is, so what? We've got peak inflation, but that doesn't mean it's got to go lower, does it? We can stay elevated, stagflation, right? We have inflation and you have almost no economic growth, which is very much like we're in now. Matter of fact, economic growth is clearly slowing. Also today of interest, and what tells me this, we still are due for a bear market rally, is that the VIX is, even with this move lower, now NASDAQ down 190, the VIX is down 3% and just never got legs. We've seen the VIX even yesterday when there were sharp losses, the VIX started separating, started going lower. It's typically a sign that the smart money is moving out of some of their hedged products and also expecting a bear market rally. So that's kind of how we're playing it right now. We're keeping our hedges in place, but we also think we're going to get a bear market rally that allow us to sell some more positions because that's the play here, folks. This is a bear market that has not run its course. It's clear today, isn't it? It's a bear market that is going to go lower. Unless some miracle happens, right? The Fed announces we're going to start QE up again. That's about all that's out there, and they're not going to do that. So we're due for a counter move in the other direction. But the reason I can tell you that these lows aren't in place is that we can't even get lows. We can't get lows to say are fresh lows that we can bounce off of. When you're hitting new lows every day, that's not the sign of a bottom or anywhere near it. But again, we're so oversold. Again, I'm repeating myself, but you get the drift. I think if we don't bounce here today or tomorrow, then people are going to start saying this market has liquidity problems, and that's when you start thinking this is an uninvestable market. I do believe that is where we're headed. Without central banks and their financial engineering, which has destroyed the entire investing and financial system, U.S. and globally. But without that, folks, this market drops 50%, 50% from here. We have an absolute crash. Think 2008, right? That's what happened to the Dow then and the S&P 500 then. So that's something that we're keeping an eye on here. One more thing I'll point out. Again, liquidity. There is no reason that precious metals, miners, and copper, base metals, there's no reason that these should be going lower. Why are they going lower? Because, again, we have a broken system where everything is a liquidity crisis. What used to be just a kind of a boilerplate correction or just a average run-of-the-mill bear market, they happen. We don't have that anymore now. Everything turns into liquidity issues, and that's because the Fed is the buyer first and last resort. They are the liquidity. They broke it. They own it. To think that they believe that they can hike rates the way they want to and then start selling all their QE into QT. No one believes that. Jay Powell's credibility was already hanging by a thread. I don't think Jay Powell's. I think he's going to be the fall guy. That's my Kip conspiracy for today. Jay Powell will be the fall guy here if this thing falls apart, and he'll be the guy that they kick out and say it's all on him because he raised rates in a slowing economy. Right? He tried to do QT in the slowing economy, and then they'll bring somebody in like Lyle Brannard, who is just going to be very dovish, right, and have more QE. So anyway, all right, folks, let's see. I don't want to miss anything important here. Down 200 right now. Again, we are looking for a bear market rally, but it's got to start here pretty soon, or we're talking about a different kind of a bear market, something that's much more brutal than what we've even experienced so far. All right, folks. Thanks very much for watching as always. Have a great day. We'll see you at the podcast at the close. Bye-bye.